I can't hear you.
In English now.
Yeah. Hi, Chris. How are you?
Good. How about you?
Thank you. Welcome. So we are very happy to welcome you on our interview series at Startup Istanbul online events. So Ozan will be hosting today's interview, and we are also very happy to host Ozan today. And I will be going to also give you all online our stage. Ozan, are you ready?
Yep.
We are online live, and also our audience is in the room. I think so. Yes, we are live, and we are going to record the meeting as well. So have a great interview.
Thanks, man. I think you can kick it off. Burak, we're live, right? Yes, I can see. That's a strange blue dot. It's usually red dots. Hi, Chris. How are you?
There's a lot of feedback, but I'm fine, except that I'm noticing your hair, and it's really annoying me because you may see that I don't have any of it, and that kind of hurts my feelings. Can you change your camera so that I don't see all that?
So that's actually my daughter's creation. So she decided to mess up with my hair. We are self-isolating, or social distancing ourselves, and we've been. I'm having a hard time to entertain a 10-year-old. So 2 days ago, she decided. I asked him if she would want to shave me. So she had a very funny video that I'm not going to share with anybody else. And then she starts to mess with my hair. So it's really tough to keep a 10-year-old entertained during this whole thing.
All right, well, that's a good excuse. I'll let you go then this time.
Thanks so much. So where are you self-isolating yourself?
I am self-isolating on, let's see if you can see, the coast of Maine.
Nice. That's good. That is pretty.
But we may have snow today. For those of you who are thinking about it, we're about 2 degrees centigrade right now.
Okay. Yeah. I'm not envious of that situation at all.
No, but I am isolated. That's the important part.
Exactly. Keep safe. Be safe. That's probably everybody who's joined us are probably doing the same thing. So, quick question. I mean, you bugged my hair, and I'm going to bug the stars on your walls. Do they represent exits? So every time you have an exit, you put a star on your wall behind you?
I don't have enough walls for that.
I wish you have as much as you want in your life, man.
Yeah.
So for those of you who have read your bio, I'll try to leave as much room as possible for questions, answers. But one particular discussion we had over email was to kind of get your idea on where do you think this crisis is going to go. Everybody has good scenarios, bad scenarios, and I'm sure you're spending a lot of time either checking in with the founders you have or trying to close deals. I'm sure you had many lined up because this is the beginning of the year. It's really fruitful for most of the VCs to close deals. If you don't mind, give us an overview of how you see things going from a VC perspective, and US being the new epicenter of the crisis.
Yeah. So I'll give you a couple things about that. Number one, I've been through similar, not the same things, 4 different recessions, global recessions in my career. So I've seen similar characteristics. It's too soon to tell how long this is going to shake out. When we do what all VCs are doing now, which is a portfolio triage, we're looking at our existing portfolio and we're determining where we might need to add capital. That means that some companies will think they're too far from getting to profitability, or they're too far from having enough cash to have a useful runway. They go. We let them go. Others, what we're looking for still is something like 18 to 24 months. The 24 months is a great to have. If a company has 24 months of cash burn, or they have a path to that, then we take them off our list of worry. 18 months, probably not going to worry too much also. Less than that, then that's where we have to really work to make sure that all the resources are being deployed to try to get them to the point where they might have that comfort level. That, I mean, we can talk about all these different tactics, but obviously it's two components: it's expenses and it's revenue. And what we see very often with entrepreneurs is a focus on expense. And that's right, because it's in their control. But what we really like people to try to understand, and they won't be able to sleep comfortably yet, is that while they're sitting there saying, well, I cannot pay my rent for 6 months, they won't evict me because the government won't let them, all of the employees can take a 50% cut, or we'll all work for free for 2 weeks a month, or whatever it is. And we won't travel, and we won't bring food in for lunch, and we won't do these things. Other companies are doing the same thing. And one of the things they're looking at is, what are the subscriptions they're paying? What are their charges? And so you have to assume that your revenue is at risk. And that I was on a call earlier today with an entrepreneur great entrepreneur, but sort of our revenue is all Fortune 500 companies. Okay, that doesn't mean that they're not going to look for a discount. That doesn't mean that the CFO might not say, I need a 20% cut. And this is excluding the obvious hits, travel or cruise lines or something. But even those that seem sustainable, you have to assume that they're going to want some discounts too. Everybody's going to do it. So when you think you're in control of your expenses, you are. When you think you're in your control of your revenue, you're not. And so you have to adjust that downward to get to that 18 to 24 month window.
Have you, do you have like a rule of thumb? Because most of almost all maybe your portfolio is SaaS companies. Have you given them a kind of a guideline of how much they should expect their revenue to be cut, or have you seen?
I don't have that, but what I do ask them to do is review each account.
Okay.
Yeah. And we're at a relatively where we invest is sort of a B, maybe C stage. The accounts are finite. It's not like they have 6 million customers or something. It's they understand, and there are already indicia showing up in their revenue streams. Obviously, as an investor that does some global companies, we have companies in our portfolio that have revenue in China. We have some that are revenue in areas of the world where the hit hasn't come as hard yet. Yep. But so it's a little early to fully assess that. We don't know yet whether this V curve of drop, quick turn up is going to happen. In my experience, that seems unlikely. It seems like it's going to take longer to rebuild the upside than it did to lose it. And so we're still assessing that, and all of our companies are assessing that. My real point is just be cognizant that you're going to have weakness in your revenue.
Yeah. So how many portfolio companies do you personally take charge? Like, what's your kind of workload? You have more than day and night, of course, but
Yeah, no. I mean, it's interesting because generally speaking, we are not leading rounds. And so our value add, we're a relatively small fund. We like to invest next to bigger funds. And our value add is usually on sort of globalization or the mobile ecosystem, because those are areas of my background. In times like this, though, we tend to be more involved, or at least I do, because I am old and have experience through these things. And sometimes the founders are willing to take advice from somebody who's been through it before. It's one of the few benefits of being old. And I'm not very patient. And so combine those two things, usually we get some fast decision making, which is required in this kind of time.
Yeah, that's tough. And I'm sure like you had some deals lined up, and we had been seeing a lot of Twitter bashing for VCs that have pulled out term sheets from the table and who are either reassessing most of the deals, probably because they're super busy with triaging the already existing portfolio. And since you're already investing with all these guys, did you see like an immediate shift towards crisis management and shift in priorities, or is this just a few founders? Is this just a regular events? How would you assess that situation?
A few things. Number one, I wouldn't be doing a lot of Twitter bashing. You have to assume that everybody is doing the best they can right now. I don't think it serves you well to Twitter bash. It doesn't reflect well on you as an entrepreneur in this environment. And ultimately, that's one of the few things that you can control, which is your reputation. Now, for the funds, yes, I've seen people pull out of deals where, at least the commitment was oral, maybe the documents hadn't been signed. And I've seen some pull out of deals where documents have been signed. We didn't have any live deals where we were committed. So I'm glad of that, because it can create an interesting situation. The economics of the world have changed. And so when I see VC funds changing deal terms, as long as it reflects this time, it's not some opportunistic thing, then I have to say they're being fair. You're not doing anybody any favors if you pretend that your valuation is the end of year 2019. No public market comps support that, unless somebody in our audience has something where we could use this conference platform to look each other in the eye and decide who has the virus. Now then they can talk about valuations in some new level, but otherwise valuations have changed. The world has changed. And if somebody is changing the terms, I'd be saying, hey, if I can get the capital, I'll take the capital. Now, one thing that is not really understood, and it's going to be very interesting, particularly in emerging markets, there are a lot of funds that haven't been through this type of downturn. In the US, in China, in India, in LATAM, in the broader Middle East, many are still on first and second time funds. You don't know the positioning of the LPs. LPs have made a commitment. It's in writing. It's a contractual obligation. But the truth is, depending on who they are and how they invest, those commitments could be at risk. So when you are trying to second guess what a VC does, you do have to acknowledge that they have LPs, and their job is to make money for their LPs. And if you are, let's just say that you are a first-time fund or a second-time fund that just raised, and you've deployed almost no capital. When your LP base is trying to triage its own portfolio, it's going to say, look, I'm 4 years into Fund A, they've called 60% of the capital.
Yeah.
And so if I default on this capital call, I put at risk all 60%.
Yeah.
Fund B has called only a few dollars so far, hasn't done any deals. If I default on this capital call, I lose nothing. And they're not going to be able to sue me for specific performance in a time that works. They're just not. And so there will be VC funds that think that they have committed capital that will find that their capital is not so committed.
Exactly.
And of course, the LP world changes. You have corporates who are LPs now. Most corporates, even if they're doing well in this sort of time, are going to take advantage to cut costs. And generally speaking, venture and innovation and some of those soft areas are first to go.
Yeah.
Then you have endowments and sovereign funds. Now, generally speaking, they are not changing their mind because they've got 20, 30, 40-year cycles that they look at and they understand these things happen. But if they are, they're probably thinking, well, the new managers are the ones that they would let go. And then you have family offices. While they may have very strong allocations into venture, generally speaking, a family office, for the very reason that the name suggests, has people involved, a family. Yeah. And that means there are emotions that can come back in and second guess allocation criteria. And it's unlikely that emotions are driving people to say, wow, can we make some high risk venture investments right now? Some more? Can we please make more? Yep. They're more likely saying, if anything, if they're trying to be opportunistic, they're probably saying, wait a minute, what about those 3 distressed hedge funds we're in? Shouldn't we up our allocation to those and get out of some of this early stage VC or something like that? So it's just important to keep in mind that there's a whole layer where the capital comes from behind the VCs that is very fluid.
Yeah. And I mean, looking from the family office perspective as well, probably they're going to go like, hey, like, is someone sick in the family? Like, we should be protective of before doing anything else. Like, this, as long as their wealth is concerned, they're going to have a downside of this alternative investments. It's not like anything that's safe at the moment. So fear will drive a lot of those decisions, as you said, and it's a pretty strong motive. That's really tough. So I guess you are super happy that you got one of your biggest exits before this bloomed down, like Karim's exit to Uber.
That exit, yes. You know, I'm very. I love the team at Karim, and still very, very much thinking about how this type of environment hurts their team and the team members. It's a difficult time for captains of Karim, the people in the vehicles. Very difficult. They are often basically a small business, and they don't have the resources to sustain themselves through this. And the companies, you know, Karim/Uber, are going to do as much as they can do. Luckily, what we are seeing, and I think this is a bit unusual to be coming so early in the process, is not just developed countries saying, here's how we're going to fill the void, whether it's a 6 months no income or a 3 months no income or 9 months, because we're asking you to stay at home. Those kind of programs have shown up in the past, usually in the form of some sort of a loan, maybe cash advances, and then a loan that is expectation that it'll be forgiven. But we're also seeing discussions, and I'm getting calls to sort of help think through, some of those programs in newer ecosystems. I don't have any examples in Turkey right now, but in some of the GCC countries, a couple of the LATAM countries, and one Southeast Asian country, they're actively trying to figure out how to at least preserve the progress they've made today in the tech ecosystem. And if that means paying the salaries of the employees of the startups that they've put into their state-funded incubators, or providing medical insurance, or deferring rent payments, things like that, I'm seeing action there, and that's going to be so critical that entrepreneurs, and I'm assuming that much of our audience today is, startup entrepreneurs. You got to keep on top of those programs because they could be the lifeline.
Exactly. I mean, I lived in the Middle East for 3 years. That's probably most of the time we met in like STEP or in ArabNet or most of those events. And I don't always been fascinated with how Mudassir and the rest of the Careem team was actually Careeming the captains. They were really taking care of them. And a couple of hours ago, when I was getting ready for the interview, I saw an open call from Mudassir asking large banks like Visa, Amex, and MasterCards, or the credit card operators, to cut down on the commissions they're getting out of the drivers' payments. And he also published an open letter for many of the public ecosystem players, as you mentioned, to find ways and suggested ways that they can support the captains whose livelihood mostly depends on their revenue from Careem. And when there's a lockdown, they have people that they need to feed. They have families. They have all their livelihood depending on operations like gig economy operations as large as Careem. So it is, I think, a very important step for the startup founders who used to be startup founders, or like large corporations now, to take care of their people, which I think is a little bit contrary to what large corporations have been doing recently, especially in Turkey and in other countries. Large corporations are being very reluctant in building these helplines or thinking for their employees. They're too much focused on thinking about their companies. Of course, they're worried about it, but I think that shows a different level of integration in the people's lives that startups have compared to large companies.
I think that could show that, but I think also if you look back at the history of Careem, its founding group has always been mission driven, and they have led with that. And so it doesn't surprise me at all that they're struggling with the fate of their team members, because it's been their goal all along. And so I would love to say that all startups act the same way. I don't know any that have had the passion for their team and growing their team, growing the ecosystem along with growing the company as Careem. But you are right that the employees are it's a more personal relationship in the startup world. You know them, you hired them, you co-founded with them. And it is critical that in a startup internally, the founder's reputation is much more important than at General Motors, where the CEO could be gone tomorrow. It's not really as relevant to the employees who the CEO is. In a startup, it's super relevant. And what that means, it doesn't necessarily mean that you have to find ways of sacrificing the company to save the employees, because that won't work, right? If the company goes down, didn't do the employees any good. But it does mean that you have to be absolutely authentic and truthful with your employees, because that is what you can offer. You can't offer a salvation, but you can offer information, presented fairly, as quickly as it can be presented, with hopefully a genuine empathy for everybody who's on your team.
I mean, I'm sure most of the startups that have the runway that you mentioned at the beginning will still consider firing them or downsizing as the first option, whereas we are seeing most of the large companies, they usually start like cutting costs, except for those obvious ones, from employees, which is a really big issue. And in terms of recovery from this crisis, if people's purchasing powers are also impacted, then it adds up to the recovery time, and it becomes really difficult for especially B2C companies, but also B2B companies as well.
Yeah, I think that the thing that startups have as a potential advantage is the ability to lower wages or defer taking money as long as everybody's in agreement. Yeah. Whereas in a corporation, you really can't do that. So you have to make sort of black and white decisions that this department goes or 20% cuts there. And you're right, it's harder to come back from that. This is going to be very hard to come back from, period. I mean, it just will be. There's not going to be this enormous uptick immediately. And so if you are a company that can hold on, great. One thing I do want to mention, I've mentioned this to a number of people. I think that there are startups that should consider shutting down now.
I agree.
And just do a very difficult self-assessment and say, what are the chances that we're going to get funding? If I'm getting a cold LinkedIn outreach from a company and they're thinking that Lumia Capital might actually fund them in this environment based on that, that isn't possible, not going to happen. And it may be that keeping the good graces of your current shareholders and your employees and saying, look, we're going to pay out a month's salary, we're going to shut down operations, we're going to put this money in the bank, and we're going to come back in 12 months. If it's a great idea now, it'll be a great idea in 12 months. And really consider that as a possibility. That would not be frowned upon. Other thing that I think is a potential opportunity here, and we have a couple of companies where we've talked about this, where companies are growing, there are always differences in the level of success of different markets. And sometimes the emotional attachment to growing in a market, let's say we're going to, we really want to grow in Africa, so we've got a Nigeria location. And it's important for your story and your ego and whatever. If that's not doing well, this is the perfect time to clean house, because nobody is going to second guess a decision to shut down Nigeria in this crisis, or New York, or Hong Kong. It doesn't have to be an emerging market, because they're going to assume it was smart, conservative cash preservation, not, oh, they made a big mistake in doing that in the first place. So I think it's an opportunity to prioritize the things that really don't matter and then get rid of them, because you'll have a free pass in this environment.
Exactly. I mean, I had past 2 weeks, one of the startups that I had been an angel investor and who raised multiple rounds afterwards, we had like a 3-hour conversation. And one of the things that he was mentioning is because of this attachment to the people, plus the attachment to the large opportunity, he was doing pretty good. He was getting unit economic possible in a ride sharing environment. He had very clear thoughts on how this could bounce back and grow again. But until that, he was looking for solutions to like get into the core of the business, stop and venturing out, and keeping as much of its people, because again, very much attached to people development as well. So it's really hard for the founders. But if they are, for which segments or for which sectors, I know this is a very broad question. So which sectors, which segments, clusters would you think freezing operations would make more sense? Like B2B sales companies, or companies that have $10,000 plus more per month costs? Because I think one big hit will be going into the sales operations will stop, and people are not used to account management through online tools yet. What would your take be on that?
You know, in most of the companies where we would be investors, sales and customer success are linked, meaning that the person who sells the account is probably also managing the account still. They don't have big separate departments. And so when you're looking to make sure your revenue is stable, or to understand where it's going to weaken, or what you're going to need to do, what concessions you may need to make to keep those customers, I think you're looking at those very same people. And so while they may not be as busy landing new accounts, and in fact, it's probably a terrible waste of their time, they may need to be deployed and have their compensation aligned with revenue retention.
Yeah, that's a pretty good idea. Instead of pushing them in panic mode, trying to get them to do more sales and trying to keep accounts, I think is the best way that any of the startups can plan to go through. Do you see any like technology areas or technology expenditure that most companies are reconsidering, or maybe on the opposite, considering of getting? I heard a lot of cloud companies, data storage companies, they are skyrocketing in demand because all of a sudden all these companies need, who said they will never move to cloud? I know it's like very archaic, but there's still a lot of them who will never move to cloud, who will never use offline servers because of this, because of that, or who would never use online tools like Zooms and everything. Now are just trying to find out ways to keep the business flowing.
Yeah, I mean, there are obvious, whether it's at the almost communications utility level, or some of the more the smaller versions of tools and services that facilitate work from home, are obviously in a different category. If you can 3D print respirators, you know, great, you're in a different category. But I don't think that's what the people on this call, if they're in that category and they're on this call, they're crazy.
They should go.
Right. I think we're more concerned with people who are have businesses that may be efficiency tools, but they're not necessities. And they may or may not be monopolies, so that they're in a competitive marketplace. And that's one where I don't think one individual, you or me, can tell them how to run their business. It's just that back to my main point, you have to be expecting that your revenue is at risk also. And so you need to be as proactive in keeping the customers you have as you possibly can. If you're a pre-revenue business, as we were saying earlier, you may not be, you just may want to step back from the market. Again, unless you have 3D printing masks of something, or whatever, but it just isn't the time. You're going to be wasting your time and money, and there must be more important things you could do.
I agree. It's going to hurt significantly those companies who were building investable models where if they get a funding, they'll survive. If they don't get funding, they're not going to have anything unit economic positive soon. So I think the debate that started maybe a year ago or so about profitability, about building unit economics models, even in US, the collapse of WeWork models, where it just didn't make sense with shit tons of money, is coming to an end. I think the virus will eradicate those businesses, unfortunately, or like life, fortunately, or as life is. And we will be left with either very strong necessity business rather than just needs-based, and very strong unit economics models.
I'm different just a little bit, because I do think it's a common sort of mixing of ideas when people talk about the WeWork model and its failures, of mixed in with the spend your money on growth, not on profitability. The WeWork model also was a basic business, raising capital at valuations of tech multiples.
Yeah, didn't make sense at all.
The basic business was completely sustainable. Now, maybe not in the work from home environment, but leasing office space and leasing shared office space was a fine business. It just doesn't work. It's viewed as a failure when you raised money at $1 trillion valuation and the business is really only running at $1 million valuation. So I do differentiate those two things. Having said that, yes, clearly the public markets, which already showed the tech community how they would value some of these tech businesses, in spite of how the tech industry had valued them. Here's how public markets value them. Well, now the public markets are depressed. And while they and I do not expect to see valuations roar back like maybe our president is suggesting. I think there's plenty of room for more corrections here. And the current stability of the markets, to me, is based more on the economic stimulation packages that have come in, as opposed to the real comfort that the businesses are correctly valued. And so I think we're going to see further degradation of some business values, and then that's going to translate into degradation of venture-backed businesses, because ultimately there is a direct relationship.
Yeah, I mean, those, and I think this also hurts the VC and LP community, because people were assuming 2020 could be a potentially good year for IPOs. It sure was pretty expected to have those large unicorns to be tested on the market, as you mentioned, to check if the private money was going to match the public money, if the SoftBank effect will last or not. But I think we should not be, probably this is going to be a very drought year for IPOs, if there's going to be any. And even on the exit side, I think, actually, it doesn't matter what I think. What do you think on if the potential of exits, seeing exits in this year? Who cares about what you think?
I do think there'll be some exits. I think there'll be opportunistic exits. Do we think that the IPO market will be strong? It's always difficult to say, because it depends on valuation and sector. And there are some companies that are at least tangentially related to work from home and all of these characteristics, mobility, that could take their current revenue stream and find liquidity on the public markets. Now, whether they'll do that, whether they'll be happy enough with the valuation, TBD. When I see and I know of a couple of companies that are poised to go public. When I see them telling us that they expect to start their roadshow in May or things like that, I think that they are naive and in the hands of bankers who are basically also salespeople who are there. Yeah, I mean, maybe not quite commission driven, but their bonuses are going to be success based. And if they don't take any companies public, they're not going to get a bonus, and so they're relentlessly optimistic. But that doesn't mean that the IPOs are going to happen.
Yeah.
And I think we're just too early in this cycle, where bad news could come from any front,
Yes.
or good news potentially, to understand an appropriate timeline for stability in the public markets for the existing players, let alone new players.
Yeah, I think if there's a startup that's listening, they can build an online roadshow software as a service company and try to get to those investment bankers. But I wouldn't bet my horse on that startup. It's a roadshow is difficult if you don't have a place to stay or just if you can't even go out of the room. So
now let me give you the counter view, which is that you will see, as part of the very strong pressure for cash or cash returns, venture funds pushing.
Yeah, exactly.
Because their LPs are going to be rewarding return of capital more heavily than markups.
Yeah.
And a lot more heavily than they used to. So a fund that's 5x but only returned 0.5x might not look as good as a fund that is 2x but has returned 1.8 of it. And so that dynamic will have a deep influence on how many companies maybe try to get public.
Yeah. Or try to get an exit to a live company, which you mentioned on the opportunistic side of acquisitions.
Yeah.
Do you see any area like communications or infrastructure, hardware, that would be more, we would see more action given this light?
I don't think it's sector specific. I think it's more likely company specific, because when you could have Turkish Telecom take a different perspective than Turkcell, or you could have Verizon take a different perspective than AT&T. Part of it may depend on their shareholder base, their board, their cap structure, whether they have big notes coming due or they just raise notes and they have a 5-year window to be opportunistic. So I really think it's going to be, and some management teams are not suited for that. Some management teams are suited for nuts and bolts operation. Some are suited to grow by acquisition. And so I really don't think you're going to see it by sector as much as by company.
Okay. That is one. So let me go through my notes on what I wanted to ask you if I missed anything. Well, we talked about sector specificity, especially on like growth areas. If you're an HR efficiency company, probably you might be on the okay side, but if you're just another communications tool, you could actually be an alternative to the large players. If you have
even that, so you're an HR efficiency tool. Are you a hiring efficiency tool, or a firing efficiency tool, or one that lets you answer many more employee questions than you used to be able to answer? Because those are all different things, and one might succeed very well. I don't know that a hiring tool is tailor-made for this environment.
That might prove to be really tricky. If you had been not a fund guy, but like a entrepreneur trying to look for an idea, and if you're healthy and everything, what would be considering how the world might possibly change towards more remote, even if this is resolved and we go back to business as usual, what would be the areas that you would focus on as someone who's spent a lot of time in communications and whatnot?
So here's what I would say to that. I think your underlying premise goes against how I like to invest. I don't like entrepreneurs looking for ideas. I like entrepreneurs and ideas to come together organically, meaning that somebody who's an expert in an area or working in an area or understands the trend says, here's how I could make this more efficient. Look, this is what this needs. That's not an entrepreneur looking for an idea. That's an idea and an entrepreneur that come together. That's the type I like to back. I'm not particularly interested in somebody who says, boy, I really want to start a business. Now let me think, what should I do? Those usually end up being forced.
Or we'll try to copycat something that works somewhere else, which might not work as well.
But it's just forced. It's not something they know anything about.
Yeah, perfect. So let me see if there had been interesting questions, because we have a commitment of time and we want to keep to it. And we have like some good amount of time in our hands. So there are a lot of questions on capital raise. Do you think, are there some founders have asked, do you think are there any VCs that would accept for larger equity portions but lower valuations? Should we raise for more money than?
So there's a lot of questions around this general area, and the world is different right now. And while all entrepreneurs like to optimize their capital raise, meaning raise as much as they can at the appropriate valuation from the value-added investors who can help them grow their business but won't intrude on their business, and maybe have brand name and all the things that investors like to get at once, you're going to have to take a few off the list. If you need capital and you find you have existing relationships with investors, but you're not thrilled by the valuation, take a little less capital, but take the money, because you couldn't possibly have time to meet new investors who are going to put money in a round anytime soon. That is not going to happen. Very, very unlikely. So if you're not thrilled, but you could swallow and take a deal, take the deal. Things are not going to get better anytime soon.
Some side question I didn't think of. There had been a significant surge in the number of pre-seed accelerators, incubators who would drop in, not as much as the counterparts in US, like YC or 500, but who would drop in $10,000, $20,000, but probably will take more time to kind of cultivate those startups. Do you think the debate we had on if the startups, what type of startups will survive this crisis, I think there might be debate on if some of the accelerators or incubator models who depend on some early stage funding, will they survive? How do you see that coming?
Oh, I think there'll absolutely be a shakeout. It's likely, in my view, that there will be less interest in early and seed stage investing from private individuals and traditional angel investors, and maybe even from funds. The ecosystem development efforts that often pay for these initiatives, some are going to fall away because they're going to be part of a country that is, let's say, an emerging market where they simply don't have the capital that they can spare to do something like that versus, finish a bridge or pay rents for their people or set up temporary hospitals. There may be a few instances, and the GCC, for instance, could be one of these places, although they obviously have oil price pressure too, where there's enough capital to sustain the best of those programs. But even without this economic downturn, I think we've seen too many of those programs surface, and they are effectively a for-profit entity selling their ability to help startups grow. Yeah. And I think some will absolutely shake out.
I agree. I think you had a really good point. I think those countries where we saw this emergence of incubators and accelerators with a mission, like new innovation capacity, job creation, employment, who were backed by governments or cities or municipalities, they might actually have more interest coming to them if they prove they can build momentum on keeping people paid or creating jobs. But those who were opportunistic and were taking chances on early stage companies doing growth hacking and trying to teach them how to make more money with a copycat model, I think those that were driven by mission might survive, but those were driven by fad or opportunity will just crumble and fall.
Yeah, I don't think we need to say crumble and fall, but they will shut down.
Yeah, exactly. Peacefully, let's say. Yeah. That's a tricky issue. And maybe one last question on my end. I'm trying to check the messages as well. Do you see any emerging technologies that will have faster routes to market? Like everybody's talking about VR and AR at the moment. Do you think there's a possibility that this crisis will push some of those technologies closer to the market?
Sure. Yeah. I mean, there is absolutely, as you were noting, the companies that are finally going to cloud, there is a recognition that there can be efficiency in newer models of communicating and working. And it may give some juice to some of those businesses. It's also possible that there will be some conclusion, because I'm not studying it, in some corporate environments or some businesses where it turns out that it was a negative, where productivity went down, where quality of work went down. I don't think we know yet, but I think there's a strong sense that the ability to work in new ways will take hold in some industries, and that will provide opportunities. I did see, I'm seeing some of these questions, and one of them was saying, did Chris just say that companies should pull back? And I didn't say that all companies should pull back if they're pre-revenue. What I was saying was it should be on the table for the team and its investors to consider whether fighting an uphill battle in this market to raise more money or find people willing to spend new money to give them revenue is an uphill battle that could be better saved for some time when there's more stability. I just think it should be part of the decision making.
Yeah, I agree. The founders who joined late will be able to watch this recording, so they might have questions. Some founders are asking for consumer tech startups or consumer-related companies. I'm not sure which one. Of course, it depends on the sector and everything else. But those, if you were to flip a coin on B2C companies' survival rate or B2B companies' survival rate at early stages, like maybe post-revenue, but not Series A level, what would your hypothesis be? Because you look like Nostradamus. And
we tend to, yeah, thank you. We tend to be enterprise focused, generally speaking. And so absolutely, if you have an efficiency tool that is a necessity or a huge advantage for a business, then that's going to be a good business if you can get the funding. The consumer world is already challenging and it's already very fluid, but you're going to see so many people who are cash strapped that I think that's going to be harder to imagine breaking through. But somebody will break through. Yeah, there'll be winners.
There's always going to be outsized winners and losers, and crisis will just extrapolate the idea. Unfortunately, one of the startups have asked something about travel and tourism industry. We are
tourism industry.
I think that's an area where VR could actually work. Like if you want to go and see Rome, maybe on a VR.
But you know, it's interesting because maybe a somewhat applicable situation. Certainly SARS was one, and I was very involved with the Chinese ecosystem when that happened. And 9/11 might have been another one where travel was deeply impacted. What you did see for a few years was a boom in domestic travel. Beaches that people could drive to, local amusement parks. So I mean, you can't paint it all with one brush. Maybe people will not be saying, "I've always wanted to go to the Maldives, so I will," but they might be saying, "Let's get a gullet right off the coast and stay close to home this year."
Yeah. That's true. I mean, also going towards those crises that you mentioned, security will be an area where security and maybe predictability or something around those lines will be also available for the new tourism industry, where maybe you're going to need to get digital ID to be able to board a plane, showing that you don't have any virus, or maybe the hotel you're going to go will provide you with different services where it will keep you more safe. So as you said, it's not easy to brush just saying this sector is dead. That's easy, but it's not going to happen that way.
Right.
Social. Some questions are about social distancing technologies. Will things go back to completely as normal? Do you think any company, did you start using any new technologies yourself that helps you be more efficient or more available? Did you download anything new on your app or pay?
I haven't, but you know, we invest around the world, so we already have had the issue of can't be everywhere, and when you try to be everywhere, you've got somebody who needs you somewhere else. So we've been well suited in whether it's Skype or BlueJean or Zoom or Slack or whatever. We do all those things, and I think that right now most people remain, and the US is a good example. I mean, we know it's going to get worse here. Most people remain in crisis mode around health and safety.
Yeah.
So it's still a little early to see the shakeout in the next level of crisis, which is sort of corporate crisis. Startups, of course, it's harder to differentiate those. But in terms of where dollars revenue will be generated, that's really more in the next stage. I don't think we're there yet.
I think we had a good amount of viewers, I should say. And do you have any parting words? Because there's so many questions, and maybe Burak might help them to wrap it up. Any parting words to founders that are going to watch this?
Well, you know, so when I talk to founders and I look at myself in the mirror and I realize how old I am, I think it's important for them to understand that while their highest priority today may be the business they're running, they're going to have multiple stages of their lives and careers. And if this one doesn't work, there's going to be another stage and another stage. So they have to take some comfort in the fact that they're in it for the long run. And a failure today is not the end of their world.
I think this is much needed wisdom and optimism at this stage for people like me who got stuck at home and not being able to deliver trainings or boot camps the way we used to, or like Burak, who had to cancel a whole large event. But
right.
Especially for the founders, there will be good times, although it might not seem they're coming soon. So
right.
brace for the long
run. Job, might be another business, might be another life almost, but there's more stages in everybody's life.
Yeah, just keep healthy, stay indoors, protect the loved ones.
Right.
Chris, thank you so much for your kind words and remarks. It's been a pleasure.
You're very welcome. Take care.
You too.
Ozan and Chris, thank you very much. Have a great day and night all over the world. Thank you very much. Hope to welcome you in Istanbul, Chris, in our next event.
I gotta get back. Yeah, good. Take care.
You too. Bye.
Take care. Bye-bye.